I talk to some really smart tech employees every week. They're incredibly detail oriented. They're great at their job, but they're still at risk for paying double tax on their equity comp. The reason for this is because even the big brokerage firms like Morgan Stanley, E-Trade, Fidelity, ShareWorks, all of them are required to report equity comp in a way that's terribly confusing. And most times when you look at your 1099-B, you're going to see zero for cost basis for a lot of that equity comp, especially RSUs. When you see this, alarm bells should be going off in your head, because without fail, what we see, every year is a return that lists the cost basis as zero on the capital gains report on the individual tax return. And sometimes this is like a $10,000 mistake for clients. And we see one of these without fail every year. And the key here is knowing that RSU comp is already taxed as a part of your payroll on your W-2. So if you look at your W-2 box 1, you're going to see that RSU comp is already there. And so you're already being taxed on that compensation. And if you sell those shares relatively soon after they vest, then you don't want to be double taxed on that on the capital gains report on the 1099-B. And so you have to make some adjustments for this to make sure that you aren't double taxed on this. So if you're working on your tax return here over the next couple of weeks, trying to beat the April 15th deadline, just make sure that you aren't being double taxed on your equity comp and your RSU compensation. So 3 takeaways here. One, as I mentioned, don't trust the 1099-B alone. You're going to be looking for a supplemental schedule or something that will show the actual cost basis and the adjustment that you need to make on your return. For Fidelity, that's going to be a few pages in. So you're going to find the 1099-B on one of the first couple pages of your tax document, and then look a couple pages towards the end of that, and you're going to see an adjustment report to help you report that correctly. Morgan Stanley E-Trade makes it a little bit more difficult. That's because you'll get one 1099-B document, but there's something called a supplemental tax statement. You're going to want to find that. That is your key to making sure that you aren't double taxed. ShareWorks reports, they're kind of a mess, and there's a lot more work involved with those. If you have ShareWorks, I'm sorry. Those are more difficult. If you need help with those, please feel free to reach out. If you are looking at past year's tax returns, another takeaway is look for same-day sales or sales within a few days of one another. And if you're seeing a zero cost basis or a really big capital gain on some of your prior year tax returns, that is a key. And that's one of the things we look for new clients that are coming on board. That's a key that you have probably overpaid your tax. You've got 3-year statute of limitations. So coming up April 15th, we've got a decision to make. Go back and look at those prior year tax returns and make sure that you haven't paid double tax on those. And my third takeaway today, just make sure you're doing a proactive review of this. Don't wait until the last minute of April 15th. The best time to look at this is probably, last fall. But the second best time to look at this is, hey, let's look at it in March and not April 15th when we're down to the wire. Keep in mind, you can extend your return too. Worst case scenario, go ahead and pay the tax that you think is owed, because the extension of time to file isn't an extension of time to pay. Go ahead and pay it, but don't worry about filing it yet. You've got until October 15th. If you file an extension and pay your taxes due, give yourself some more time to take a look at that. So if you're participating, in an employee stock purchase plan, RSU plan, something like that, if you need some help with that, we still have a few spots left for new clients. Feel free to reach out to us and we can schedule an intro call and discuss your situation. I'm John with McCarthy Tax, and I'm glad to talk to you today about RSU comp, making sure you don't overpay on your taxes.